Ladies and gentlemen, wonderful good day, Mines and Money London 2013, and we are now going to Africa, especially to Zimbabwe. And we are here at the booth of Caledonia Mining, and with me here is Mark Learmonth. And yeah, let's talk about this terrific dividend-paying company. Mark, thank you very much for taking the time. What is your company doing and where are you? I said Zimbabwe already. Tough country. Let's talk about that.
Well, actually, it's not a tough country. We run a gold mine in Zimbabwe. It produces 45,000 ounces a year. It's the lowest cash cost producer on the continent by a considerable margin. I mean, our cash cost per ounce is $554 an ounce. The next cheapest is Randgold, which is nearly $700 an ounce. Mm-hmm. So we're a very, very low cost producer. We've grown the business substantially over the last 3 or 4 years. We've quadrupled production. And we brought our
Since when you are in production?
Well, we've been in production since we bought the thing off Kinross in 2006. The mine itself's been in production since 1906, but we really started to get the mine going in 2009 when the commercial situation in Zimbabwe improved significantly, and we can talk about that a bit later if you like.
Definitely.
But yeah, we've got a fantastic business, produces gold, low cash cost, and as you say, at the group level we pay a dividend, and we're on a yield of nearly 8%.
That's really a lot in those low interest times.
Yeah, it's an 8% yield, and the yield's also well covered. We've got $25 million of cash in the bank, not sitting in Zimbabwe, that's sitting in London. Okay. The dividend we're paying next year is a $3 million dividend, so the dividend's well covered by our cash reserves and resources, and the dividend reflects $3 million or 6 cent dividend. It's about a fifth of our earnings and our cash flow, so it's very well covered, very stable dividend, which as we grow the business over the next few years, we have the scope to increase that dividend.
So you said you produce roughly 45,000 ounces by now. What is the target for next year and let's say in 2-3 years?
Okay, 45,000 for this year, 2013. Next year we're targeting 48. 2015 we're targeting 52, and thereafter our expectation is to increase it to 76. But that's from the existing mine footprint. You know, that's from all this stuff you see behind us here. In addition to this, we have 18 what we call satellite properties, all dotted around the existing mine footprint. 18 of these things, all within easy trucking distance of the main metallurgical plant. And over the coming months and years, we expect to see further production coming from those, which will be in addition to the 76,000 ounces. So we could, aspirationally, we would hope to see our production going well beyond 76, up to perhaps 100,000 ounces within 5 or 10 years.
Okay. Is it all underground, or you have also some open pit satellites?
It's all underground. The mine operates down to a level of 765 meters below surface, but that's not particularly deep. I mean, the mine isn't particularly hot. In fact, the mine's cooler than above ground, so we don't need to cool the mine, we don't need to pump the mine, we don't need to support the mine. So it's a fairly moderate depth. The satellite projects, they're all underground. Shallowest is probably 120 meters below surface, and some of the deeper ones are about 350 meters below surface. But that's not deep. Certainly by South African standards, that's not even near the surface. So exactly. That's kind of nowhere. Okay?
Definitely. I saw that your head grade was moving up in the last quarter, right? How did that come? Have you had better material?
Yeah, it's just the way the mine develops. As we develop through an ore body, we go up through the middle of the ore body and then move to the sides. And just as we go up through the middle of the ore body, the grades do tend to be higher. The average grade, the average mine grade is about 3.84 grams a ton. You're quite right. Over the last few quarters, we've achieved slightly higher than that, and that's just the normal function of our mine development. For planning purposes, we guide people towards a grade of about 3.9 grams a ton, and a recovery of 93.6%. That's a very high recovery.
Very high, yeah.
I mean, if this thing was a car, it would have a Formula One engine. I mean, recoveries of 93% are fantastic.
Okay, so let's come to Zimbabwe really, because sometimes I have the feeling in the media reporting here in Europe, it's all negative, it's all horrible, and it looks like there's more. Obviously it's not, because you have such a really successful company and plant there. So can you elaborate a bit or explain to us why Zimbabwe, what is so great on the country, and what may be the future there?
Okay, I mean, Zimbabwe does get a very, very bad press, and I guarantee that everyone's heard of Zimbabwe and nobody's heard anything good about Zimbabwe.
Exactly, yeah.
But let's put a couple of facts on the table. There's no inflation in Zimbabwe. So the hyperinflation has disappeared. You use the US dollar. This year, inflation is probably running at about 0%. The differentiating feature between Zimbabwe and places like South Africa or Congo is the quality of the workforce. We employ 950 people. Every single one of those people is an indigenous, is a black Zimbabwean, the highest possible quality. They run everything in the mine, and they live on our mine village. We provide them with high-quality housing, we provide them with electricity, drinking water, education, recreation facilities, shopping facilities, and they live there with their wives and their children. So it's not one of these sort of South African-style shanty towns full of disreputable characters and disease. This is actually a very pleasant working environment. When we go to the mine, we live there. On a day-to-day basis, we operate very effectively. I mean, we wouldn't be able to achieve the cash costs that we achieve if we were not able to operate there. So, I mean, the government administration is slow, but it's effective. We don't get endless requests for bribes or little petty corruption, unlike South Africa. So, yeah, from a political level, Zimbabwe does get a very, very poor press, but actually on a day-to-day operating basis, it's safe, it's secure, high-quality workforce, and everything this mine uses, all the equipment this mine uses, we truck up, we buy it in Johannesburg ourselves, and we put it on a lorry and we truck it up to the mine. No problem, no difference. So it's not as though we've got to buy this stuff at massive markups from some middleman in Harare, and then it takes a week to get to the mine. This stuff gets there quickly. So
that sounds like a perfect place.
It is
nearly perfect.
It is nearly perfect. It is nearly perfect. The only slight difference being at this time of the year it's a bit hot.
Okay, good. Let's come shortly to your copper cobalt project in Zambia. What's the plan there?
That's very small. It's really a little more than an exploration play at this stage, and really the focus of the group is exclusively at the moment on the blanket mine in Zimbabwe. So I wouldn't get yourselves too excited about the Zambian asset.
Good. Then let's stick with Zimbabwe. Thank you very much for that. Merry Christmas and all the best for next year.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, that was Mark Learmonth from Caledonia Mining, and you heard it, Zimbabwe. It is a great place to mine. It is safe. Everything is possible. They do their job there. The workforce is fantastic, and the company pays over 8% dividend. So watch out for it. Great company. Thanks and bye-bye from London.